Welcome to today's video technical update presented by CMS Forex. It is Thursday, December 3rd, 2009. I'm Fan Yang, your technical analyst here, and I will go over some developments in the Forex market. We'll take a look at the pound dollar, the euro pound, and the US dollar Japanese yen pairs. This video is being prepared at 4:30 p.m. just before the close of the US session. We have been closely following the pound dollar pair this week after a head and shoulders break and a sort of a throwback pullback in the form of a Gartley. So the Gartley completed here. We anticipated some decline here, but there was a very unconvincing attempt. Then it had a rally. So let me zoom in a little bit. See, we had an unconvincing attempt when we spotted the completion of the Gartley. Excuse me. Then we had this rally, which at that point looked like it would have been a breakout, but before confirmation, this could also be a clear out, or in this case an exhaustion candlestick. And as we gather more information, we had these unconvincing attempts to rally and then another bearish candle. So this bearish candle was a signal decline of reversal. This one was a confirmation as it broke the previous support, and we are on our way on this decline. At the moment, however, you see the stochastic is oversold here, and in the 1 hour time frame it's also oversold. And you see we're basically in a support zone, a very short-term support zone. And finally, in the daily, we see that today's action completes a reversal combination here. Okay, I don't know why that's there, but here's a reversal combination. This is a engulfing pattern, and although it's not an outside bar, it is an engulfing pattern. Now, when we are considering this and we consider our reward to risk ratio, looking at the 4 hour time frame, it's not very appealing. We have to set our stop above this power lines, and using 2 ATR, it's going to be somewhere up here, and the reward to risk ratio would basically be not even 1-to-1 in this case. So if you look at a lower time frame and allow this leg this first down leg to finish, wait for reversal, then we're looking at even shorter term decline, but our reward to risk ratio would be improved because we're going to use whatever is established as resistance, as the new resistance, to be the power line, because at this moment it's up here. It's actually the previous resistance, but once this comes down, if it does, and if the resistance holds here, then we can use our 1 hour time frame to look for a trigger, and our projection would be to the 1.25 area. I'm sorry, 1.6250 area, or 1.26270 area. Alright, so that's the pound dollar pair. The euro pound pair is our next pair, and I just wanted to start here at the daily time frame. We see this rally. We have a potential Elliott wave count of 1, 2, 3, 4, and we are potentially in wave 5, the terminal wave here. Also, this could be our first sub wave, and this could be our first our wave 2, sub wave 2. So we're going to look at the 4 hour time frame for more details, but we note here that you see we came down here and this was the 61.8% retracement level, as well as our previous resistance, which is now support. Then we had this break of this power line of this resistance trend line, so that was a very important signal for a continuation in this rally. This is basically a counter trend breakout entry approach. Now, if here it would have been sort of difficult because there was resistance all along here at 0.90, like 50 area. So now we have confirmation. The 0.90 50 area broke and held as support. So now going down to the 4-hour time frame, today's price action basically supported the 0.90 50 level. That was very important. If this broke, then we would be in a short-term bearish mode. But at the moment, we are either neutral or bullish. Okay, so now looking at the 1-hour time frame, what we may want to do now is to wait. See here, we have a resistance here, and the market is struggling to get past that. This is basically the 0.91 area, 0.91, 0.92 area up here. So this here is the 0.91 area, right? Let me just make sure. Here, 0.50. Oh, that's the point. Okay, so this is the 0.9110 area, I would say, or 90. Yeah, 9110 area. Anyway, here we have some reversal signals. Okay, and we have a bearish divergence. So there's a likelihood that in the Asian session we would have either a ranging action here or a more pronounced correction down back down to the 0.9070, 0.9060 area. But what we are anticipating now is sort of this retest and establishment of this as our support. Then we will look for bottoming action around here to plan for a bullish outlook. Now this, you see that this would be basically two legs of this. So you have to plan your target in this time zone, which would be, oops, sorry about that, which would be up here. Alright, so that's all for the Euro Pound. Finally, I want to take a look at the US dollar Japanese yen pair. It rallied. If you look at the 4-hour time frame, it rallied past some important short-term resistance, but now we're testing a more medium-term resistance here. The market, as you can see here, showed very good reversal signals, but now before considering the bullish outlook, we have to first crack these resistance lines. What we can plan for in the 4-hour time frame, as you see right now, it's testing this power line and resistance. Now even if so let's look at it this way. We had basically one rally, sort of 3 legs up, 1, 2, 3. So we may want to prepare for some short-term bearish action at the moment. And if this bearish action is supported at this level, or at this level, preferably this level, then if the market breaks, then we have a significant level. At the moment, this is not a bullish reversal signal. It's sort of a short-term reversal that has a chance of continuing down, but if it does support, then we can break this medium-term resistance, then we can consider the bullish outlook. That wraps up today's technical update in the Forex market. Once again, I'm your technical analyst here at CMS Forex. For all your market updates as well as educational resources, make sure to visit fxtimes.com. Thank you for watching and see you tomorrow.